to PreciousMetalsInvesting.com. My name is Ted Sudol, and I have the pleasure of having as my guest today Paul Majanovic. Paul is the author of Precious Metals Investing for Dummies and Stock Investing for Dummies. Welcome, Paul.
Man, oh man, this is the episode I wasn't, itching to do, whatever. But, you were telling me that in, recent weeks or months or whatever, one of the most circulated videos or interviews I did was, I think, what was it, Kiko, the interview, right?
Yes.
And I was talking about precious metals, and she said, well, what are you expecting for the Dow? Well, I don't see it going much further, maybe 27,000. So all of a sudden, what did she do? She labeled the entire video, Paul predicts 27,000 video. And all of a sudden, people are like, what do you mean? The highest it went, actually, it was flirting close to the 26,000. And the thing, what I was trying to tell people, I didn't make that a bullish prediction. Actually, like saying, yeah, it's going to roar up to 27,000. I was there basically telling people I see some kind of ceiling in place in the short term. You know what I mean? And so when I was making that, that forecast, I thought that the stock market had run a long ways. And I thought that there was like, I can't see it going up forever. I mean, could it go to 28,000 or 28,000 like a year from now or 2 years from now? Yeah, I think, we'll see what happens at that point, whatever. But what's interesting? Probably one of the diciest things you can do in this world is to predict, the stock market in the short term. And for me, for many of you, you saw how the stock market seemed unstoppable in the year 2017. It seemed like no matter what crisis came by, the stock market shrugged it all off. I mean, if there was a forecast of like, Jupiter crashing into planet Earth, people saying, oh, well, probably then there'll be infrastructure plays. Let's be bullish on the stock market. I mean, that's how it was in 2017. Whereas for 2018, it's been volatility galore. And for me, I'm thinking at some point there had to be a correction. So I said, when the stock market, the high, forgive me for not being precise about, but it was like 25,900, 26,000 roughly. So I was thinking, you might see the 27,000, you know what I mean? But could it go more? Whatever. But that's a dicey thing because why does the stock market go up at all or go down at all? And that is the cumulative transactions of buyers and sellers. And look, the decisions by buyers and sellers, it could be a fickle thing. It's not always a precise matter. Me, I like to forecast long-term trends because those are easier and more logical, and there's more empirical evidence for this. I mean, obviously, like when I see things such as the aging of America, and and I see the demographics for the next 10 years, the aging of America. So what does it tell me? I says, then I make a forecast that long term, the stocks of companies tied to the aging of America will do well. So it's a very logical thing. But short term, like where's the stock market going to be next week or next month? You might as well throw darts and have blind monkeys doing it, whatever. But
short term is a lot of it is based on emotion. And people's emotion, people's sentiment, what do they call it? Animal spirit?
Animal spirit. Oh, is that what it is?
Right.
Exactly, yeah. Exactly.
That's really difficult to predict.
Yeah. So anyway, the bottom line is, long term, am I bullish on the stock market? Probably. But will it be zigzagging like crazy? Most likely as well. But in the short term, you have my quote-unquote forecast for that, or expectations at least. So we'll see. And so right now, we're doing this roughly in the springtime. So who knows, this summer might be, who knows what kind of thing is in store. The world is always a crazy place. But the bottom line is that, what does it mean for your investing? Don't try to peg your long-term investment plans on some short-term, throwing the dart at this number routine. You don't invest in stocks, you invest in companies. You look at the companies and it says, are these companies profitable? Are they selling things that are going to be needed now and needed for the foreseeable future? Then find out which companies are well positioned in the industries that are well positioned. Then see what their prices are at. Look at things like PE ratio, sales, net profits. How have they done the most recent few years? And then you're talking about investing. So don't worry about stock is at price A or price B. Ask yourself, is this a fair price to pay for this stock given the company that you're investing in? Because that's what you're investing in, not stock. We call it stock investing, but stock investing or stocks is a means to an end for you to participate in the underlying companies and analyze the companies and where do they see way that he's going to be heading for the foreseeable future, and the data's there. In other words, I tell you, look at the fundamentals, and you start there.
And when you use those factors to choose what you're investing in, one of the other side benefits is you can sleep well at night. You're not a day trader who's waking up in terror in the morning to find out what the news is.
Exactly. And for me, I always, sometimes I lose sleep because that means that people, you said 27,000. Okay. Leave me alone about that, whatever. But we'll see. We'll see how it goes. Thank you for viewing, and thank you for letting me clarify whatever I've said.
Thank you for being with us today at preciousmetalsinvesting.com. I'd urge all of the viewers here to listen to the Precious Metals Investing podcast. It's available on iTunes for Apple users. It's available on Google Play for Android users. And make sure you pick up a copy of Paul's book, Precious Metals Investing for Dummies. Thank you, Paul.
Jeez, I hope Kitco figures out that they'll see this video.